हेलो अस्सलाम वालेकुम, हाउ आर यू? ओके जनाब, कैसे हैं आप? टुडे वी हैव टू स्टार्ट A2 June 2020 paper 32. Okay, the last installment. We are doing, inshallah. So here's your paper. So this is your paper we were doing. Now what? See the question number 5 and 6 we have to do today, inshallah, and we will end up this question today, inshallah. We have done 3, 4. Question number 5. V Limited operates a standard costing system and a system of budgetary control, both systems. The budgetary information standard cost for March 2020 was follow based output, budgetary fixed overheads, standard cost per unit, direct material, and direct labor. V Limited uses labor hours to absorb fixed overhead. Okay. Now, the actual results for March 2020 were as follows. Output 2,400 units, fixed overhead 49,800, direct material cost 68,340, direct material usage 8,040 kilos, direct labor cost 1,56,864, and direct labor hours 9120 hours. That's it. Answer the following. Prepare a cost statement column and form showing the master budget, flex budget, and the actual result. Now, we have to make master budget, of course. Then we have to make flex budget. Flex budget is actually made with the change in activity level. Getting my point? So here it is. Master budget. First, what we have to do? We have to write direct materials DL. Okay. Direct material cost we have in master budget. Our direct material cost is going to be 60,000. How? Because they have to produce 2,500 units multiplied by material information is this one. $24 per material. So 24, 2,500, 2,500 units multiplied by $24, the standard rate, and we get the master budget over here. So what about flex budget? Flex budget means we have changed the activity level. Now activity is for 2,400 units and multiplied by standard cost that was supposed to be paid is 64. So 20%. 2,400 units we produce at 24 direct material standard costing rate. So flex budget shows 57,600. 57,600. Actual is very much given there. It is 68,000. 68,340. Now come to direct labor. DL. Direct labor is for 2,500 units multiplied by 64. So it is 160,000 master budget. Okay, what about a flex budget? Flex budget is based on your activity level. Activity is for 2,400 units multiplied by 64. So it should be 153,600. The actual result is 156,864. 156,864. Okay. Now, fixed overhead, FOH. In master budget, the FOH is given 48,000. In flex budget, it should be for $48,000 if you have produced 2,400. Now see, 48,000 divided by 2,500, 19.2 is the direct factory overhead rate per unit. Okay, per unit. Now for 2,400 unit, 2,400 multiplied by 19.2. The answer is 46,080 should be your spending according to your activity level. But actually what happened, we spent 49,800. Getting my point clear? And what we have to do here, we have to put a line over here and we have to get the totals over here. Now totals, here 268,000. 257,000. The actual total cost is 275,000. Now, calculate direct material variance. In direct material variance, okay. Now, direct material total variance. Direct material total variance is going to be calculated by how? Now, see, actual is how much? 68,340 actual spend minus uh, flex budget recording is 57,600. So total variance is 10,740 adverse. Okay. Okay. Now, uh, now see. Now, direct material price variance. Direct material price variance. Okay. 68,340 is your total actual cost of material, and 64,320 should have been the cost if 22,400 units were produced. So the total variance is 4,020, and this is adverse. Now, direct material usage variance. 7,200 total kilos, but we have used 8,040 kilos, total 840 extra kilo, multiply by $8, the standard price, and this variance is 6,720 adverse. Now see, if you get the total of 4,020 and 6,720, you will get 10,740 flex budget direct material variance. Okay. Now see the answer. B1. Now B2. Analyze the reason for direct material variance. Support your answer with calculations. So actually, direct material variance and direct material usage variance and price variance should be calculated over here, but I calculated in that column because it doesn't take any space. And the reason is total variance we are going to calculate from the flex budget, and price and usage variance we are going to calculate using the standard costing. And see both but price variance and usage variance, the total is the same as we calculated from the flex budget. Okay. Now next question. Calculate the direct labor variance. Now the direct labor variance is very easy to calculate. First is DL, labor variance. Now for labor variance, it is very easy now. The total actual labor cost is 1,56,864, and according to flex budget, it is $1,53,600. So the variance is 3,200 3,264, and this is adverse. Okay. Now come to labor rate variance. Labor rate variance, if we calculate, so the actual labor head cost is 1,56,864 minus what labor cost should have been. What labor cost should have been? It is 145,920. 145,920, and the answer is 3,264. Sorry, 10,944. 10,944. This is adverse variance. Okay. Now, labor usage variance. Labor usage variance is equal to, now see, you are supposed to spend 9,600 hours, but you have only used 9,120 hours. Okay, so the answer is we have saved how much? 9,600 minus 9,120. Answer 480 hours. We have saved 480 multiplied by $16, and we get 7680 favorable value. 7680, and this is favorable variance. So if we take the difference of adverse and favorable variance here, rate variance is adverse, usage variance is favorable, and if we take the difference, we will find 3,264 the total variance according to the flex method. Okay. Is there something left? Total fixed overhead variance. Total fixed overhead variance is easy to calculate. Now, according to the budget, see, overhead is actual overhead is 49,800 and flex overhead is 46,080. So the answer is again adverse total overhead variance. So what we are going to do? Fixed overhead variance. Fixed overhead variance is equal to 49,800 minus 46,080 flex budget, and the answer is 3,720, and it is at. Now, expenditure variance, fixed overhead expenditure variance is calculated actual overhead, fixed overhead expenditure variance. Okay, is equal to 49,800 the actual minus standard was how much? 48,000. Sorry, master budget was 48,000. So minus 48,000, and the answer is 1,800 adverse. This is we have to calculate from the master budget. Okay, now fixed overhead volume variance. Fixed overhead volume variance, we have to calculate how much. Our master budget says 48,000. Okay, and our flex budget says 46,080 is equal to 1,920 is our adverse variance. Okay. And if you get a total, 1,800 plus 920, we'll get 3,720 the total variance. Now see, In a meeting reviewing the April 2020 budget, the directors and the production manager should be fully accounted for the adverse variance of direct material direct labor. How can the production manager responsible for adverse variance of direct material direct labor? He is only responsible for the efficiency variance and labor efficiency or labor usage variance is favorable. Purchase department is responsible. Are you getting my point here? Okay. The resource has changed. Sorry. Now we have to go to question number 6. Prepare a cash budget for the month of. Okay, first we see the question. Okay, now see the question. T Limited has the following sales budget in units for the first 5 months of 2021. January, February, March, April, May. Okay. Number of units. Okay. Budget unit contribution, selling price, raw material, direct wages, contribution. Now, the ratio of credit sales to cash sales is 3:2. Credit customers are normally allowed a 2-month credit period. How they will enjoy a 5% cash discount if they sales settle their trade debts in the following month after sale. It is estimated 20% of customers will take the cash discount. Okay. Now, products sold during month will be produced 1 month before they are sold. Raw materials will be purchased 1 month before the production. Supplier will be paid 1 month after the purchases. These two are very important considerations. The cash collection and the payment to the creditor. 80% of the wages will be paid in the month of production, while the remainder will be paid in the following month. Additional machine costing 37 purchase and paid for in April. Overhead 56,200 will be paid in the month they are incurred. These include depreciation 4,200. The additional machine will increase the depreciation by 600 each month from April. Okay. Cash balance on 1st March 2021 is estimated to be $39,400. Okay, prepare a cash budget for March and April. That's a wonderful question. It's budgeting, preparing budget is a little confusing, but it's very interesting question. Okay. Now, I'm going to write March. Now, see, opening balance of cash. How much in March? Question. Opening balance of cash is 39,400. 39,400. Okay. Now, in March, we will collect cash sale of March. How much cash sale of March? Now, total sales of March is 2,800 multiplied by 75. 210 multiplied by 2 divided by 5. 84,000 cash sales of March. How much? Done? Now, sales in January. We will collect cash from sales in January. So that is how much? The sales in January was 24,000 multiplied by 75. 1,000 multiplied by 3 divided by 1,000 86,000. Now, sales in February. Now, in February, what happened? The sales of February, which we have to collect 2,600 multiplied by 75, total sales multiplied by 3 divided by 5. The trade sales of February is 170,000, out of which 20% will be collected in the following month of March, and out of that we collect only 95%. So 22,230. 22,230. Now total cash available we have over here 9,400 plus 84,000 plus 6,400 plus 22,000 232030. Now this is cash inflows. Now outflows. In outflows, we have to pay for materials, of because we are producing for May, April, actually. So we will produce for materials of April. We have to pay for materials of April. So how much we have to pay for the materials of April? 3,000 units. 1,000 multiplied by 24. We have to pay 72,000 for April because in current month we are producing for that. Now come to wages. Now we have to give adding wages. We will pay wages. We are paying 80% in the month of production because we are producing for April and March actually. So 3,000 units multiplied by $28. We'll get 84,000 total payments, out of which 80% will be paid. That is 67,200 is going to be paid for April. April wages. How much? This is 67,000. Done. Okay. And we have to pay for the wages of March also. We have to pay for the March. 20% of the labor cost, labor wages will be paid. March wages will be paid in April because March production was done in February. So March wages were how much? 2,800 multiplied by 2,800 multiplied that is 15,680. Two wages we have to pay. 15,680 we have to pay for it. Okay. Now what is left with us? The overhead cost. Overheads. Other overheads. Other overheads. Now, other overheads we have total how much? 56,000 will be paid in the month. This include depreciation 4,200, so we have to deduct 6,210 minus 4,000. 52,001. Got it? So we have 1, 2, 3, 4 payments. Okay. Now we'll get a total of 4 payments over here. And the total payments is how much? We're just calculating the total payments. Total outflows. How much? 72,000 plus 7,500 plus 15,680 plus 52,010. 206,890 is the total. 206,890. Okay. So cash balance. Ending cash balance. Ending. How much? 232,030. 25,140. Ending cash balance of March. So the ending cash balance of March must be opening cash balance for April. Done. Now we have to work for April. Okay, now cash sales in April. Cash sales in April, we will collect how much? 90,000. 90,000 we will collect because in April 3,000 units multiplied by 75 multiplied by 2 divided by 5. 2 is to 3 to 2 ratio. Yes. Okay. Now we will collect sales in February. Now February sales is how much? Sale in February is 22,600 units multiplied by 75 multiplied by 3 divided by 5. Trade sales multiplied by 80%. 93,600 we collect from February sales. 93,600 we collect from the sale of February and sales of March. Sales in March. Sales in March is how much? Sales in March. Sales in March was 2,800 multiplied by 75 multiplied by 3 divided by 5 multiplied by 20% and we get 95% of 23,940. Now total collection would be 232,680. Yes. 232,680. Now we have to pay for materials of May. So materials of May we are paying materials of May. So materials of May is how much? 3,200 multiplied by 24. 3,200 multiplied by 24. 76,800 we are going to pay for the materials of May. Now wages. Now at present we are producing for May. Okay. So we are to pay for May wages. What happens in May? 3,200 multiplied by 28. $9,600 we have to pay multiplied by 80% would be 71,680. 71,680 for the May. And we have to pay 20% of wages of April. In April, the production was 3,000 multiplied by 28 multiplied by 20%, that is 16,800 wages we have to pay for April here. Done. Other overheads we have. Other overheads will be the same. 52,010. And no, one more thing is purchase of machinery. How much? 36,000. Now, total outflows. First we get the total outflows. Total how much? Only total outflows from 76,800 plus 71,680 plus 16,800 plus 52,010 plus 36,000. Okay, the total is 176,490. Okay, 176,000. is 3, 9, 0. Now, if we get the total outflows from total inflows, 232,680, 680, answer is 20,610 negative cash flow. Very good. 20,610. Done? Okay. Now move to the next question. Next part, sorry. Place for working. You can use it as working. Okay. To purpose of preparing cash budget. Now, if you prepare cash budget, what will happen? So we will be in a position to know the cash deficit or cash surplus. The first surplus. And we can coordinate our cash flow and our inflow and outflow. Okay. Oh, whether the April sales will achieve or exceed the break-even point. Now, from April, we have to calculate other overheads. Other overheads. We have how much? 6,210. Depreciation of the first. Six thousand eight ten divided by 22. Answer is 2,070. Actual units sold in April 3,000. Units. Yeah, you can exceed 53 units, exceeded by 53 units. Six. The directors are considering measure to improve company's cash position. Expect what is making sale action will improve the company's cash position. That's it. Now, sales and cash. According to break-even sales and cash collection and sales have different timings because mostly sales are made on cash basis, credit basis, and 20% is on cash basis, 80% on credit basis, and the collection timings are very different. So we cannot consider if we can exceed a break-even the company's cash position can only be strong when you collect the money on the required time. In the given time period, and all your customers will pay and pay with their discount, they pay within time, and then Okay, so that's all for today. See you, inshallah. So, inshallah, see you tomorrow with more levels. Now again, cycle will start from O levels, inshallah. So, thank you for today. Suggestions are always welcome, and I'm sure I'll keep trying to solve as much as paper as I can before the October attempt. And inshallah, till June, we will be able to produce. So, thank you. Allah Hafiz.